For example, if we have a little look at the dollar yen today, guys, and in terms of the two types, they're actually continuation and reversal. And the most commonly used ones by sort of beginner and intermediate traders are these continuation breakouts. And the reason the continuation breakouts are so good or important to a lot of traders and a lot easier to trade is because you already have an established trend. We had just come to the euro. And if you look in the chart, obviously, we can see we've entered into a trend. And now a lot of people will be looking for some sort of continuation of this move and looking for a break potentially through the high. If we look at sort of the longer term trend in the likes of cable, and for that we will just delete some of these lines, you can see, you know, we've been in a big trend, we pull back, we then have a breakout, we move back, and okay, we do form a bigger range, but generally speaking, you will get some form of continuation, and they are generally a lot more easily traded. So they're the ones that I favor. Reversal breakouts are a lot harder, you know, because you are going against the market, guys. Now, in terms of what is sort of the first thing we consider when we're trading the breakout, guys, are the entries. Now, Milan has already said that there are aggressive and conservative types of entry. How many of you guys have heard of the aggressive and conservative types of entry, and how many of you actually use a particular method? There are actually three. There is the ultra-conservative method, which is to do with sort of trend initiation. Maybe FX Boyke, Lauren, or one of the guys who are obviously breakout traders. Maybe you could actually sort of enlighten us a little bit. What about you, Adam? Forex Gal, Milan, what sort of entry method do you like to use when you're trading? Are you a conservative? Are you an aggressive breakout trader? So FX Boyke likes the retest, Milan likes the conservative. Yeah, I'm more of sort of an aggressive trader. You know, I've been trading for sort of 7-8 years now professionally, and I prefer the aggressive method. So, you know, there are sort of three types. Now, the aggressive method basically requires a lot of sort of conviction that a trade is going to continue, and generally the aggressive method will of entry will really take place as soon as the trend breaks. Now, generally speaking, I look for the trend to be broken by sort of a variable number. So if I'm trading on a 5-minute chart, I like to see the actual trend line itself be broken by at least 3 to 5 pips. Now, the reason I do that is I like to try and optimize entry. Now, it doesn't always work. So one of the ways you can sort of factor in if you are going to trade aggressively and try and preempt the move is by adding sort of half of your position on the entry, and then the other half here on the open of the next candle once we've broken out. Okay, but the problem with this is you do need to monitor other factors. For example, things like looking at move and average direction, things like parabolic SAR to look at a direction or potential sort of strength of a trend in a market. Things like the accelerator oscillator are also something that you can use when you are trading with the aggressive method. Well, this is the thing, you have to just sort of look at volume, look at sort of the way the market is trading, and it is a more intuitive way of trading breakouts, the aggressive method. So it's not something that you know, beginner or even intermediate traders should do, because, you know, what is to say that actually, you know, the breakout that we see, and again, let's just remove some of these lines. You will have to excuse me, this was all clear, unfortunately, obviously, with the issue we had with power, the lines have come back from the profile. So there's nothing to say that when you enter into a breakout that it isn't going to be a false breakout. But what you can do is very, very much monitor other factors. You know, monitor the RSI. You want to see a nice steep move up. You can look at the accelerator oscillator. You can look at volume. You want to see higher volume, and you can also use things, you know, such as your MACD. You can use things such as your stochastics. Again, you know, most of these indicators will give you an indication if a trend is going to continue. For example, on the parabolic side, if you're trading on a daily and you see a breakout occur on the daily, you can very, very quickly, you know, nip down to a 30-minute chart and just look to see if the trend is confirmed. But again, very, very advanced. You know, the most commonly used methods are actually the ones that you guys use, conservative and the ultra-conservative methods. Now, the conservative method for me is very, very simple. I will sort of enter using scaling in, because how often, you know, you put a trade on and it doesn't quite retest the level after a breakout. will depend on sort of the market you're trading, but it happens a lot. You know, how many of you guys have ever sort of waited for a retest of a level and after a breakout, and it's not actually got quite back to that level that you were trading out? You do need a volume indicator. The one in MT4 is not a true representation of the whole market, Dalesh, but it is good enough. You know, I've been testing it for at least 2 or 3 years, and it seems to be okay for just giving you the volume spikes that you see. Volume should be increasing on a breakout. So, you know, how many of you guys have been caught in trades like this before? I know for a fact that I've been caught many a time where I've looked for a conservative entry. I've been, you know, resting an offer in the market maybe here, and the market's never got quite up to that level. So what I will generally do is I will look for a breakout to occur, obviously look for that pullback. And if we just pop to a chart now and have a little look at an example of a breakout where we sort of break through a resistance level here. Okay. And we'll just drop that down, you know, rather than just waiting for the retest, which, you know, is obviously optimal, to ensure that I actually have some of the trade on, I will place it just above the level. And generally, you know, it's to do with the nature of markets, support and resistance not always being at the same price. You know, we know that, you know, we have support and resistance zones. So it's very, very important that I enter into the trade. And even if it's just 25%, the 25% difference, you know, that you put on can make a big difference to your P&L if that breakout ensues. You know, and it's not going to make a massive difference to your P&L if, you know, you are resting it just a little bit further on. Well, we'll talk about methods for false breakouts in a second. We're just talking about the entry methods at the moment, Mike. So don't worry too much. We'll be talking about those shortly, some ways for identifying the fake outs. Price action, obviously, is the easy one, as are things like divergence and volume. We'll discuss those in a second. As well as this, guys, how many of you have heard of the ultra-conservative method? Now, this requires trend initiation. Okay, so basically this is something that is generally used in a market that isn't trending, because we talk about continuation, we talk about reversal, but when a market is actually ranging, okay, like we can see, you know, we have a little bit of a downtrend, but generally the market is in a very big range here. Okay, when a trend actually begins to develop, okay, there are no guarantees that, you know, that trend's not just going to form a new high to the range. Okay, there's no guarantees. If a market's been ranging for a long, long time, like we can see in this example here with our resistance and our support level, okay, there's no guarantee that the market is going to enter into a trend. Quite often than not, you know, you'll form a new high, a new support high, and you may have a range within a range, but generally you will, you know, potentially just move your support or resistance zone a little bit further. Okay, for example, in this example, we get a breakout of a nice resistance zone and we break back in and we now form a range. Now, obviously, there is a range within a range there, which we look to draw. So we're now trading within this range. And the ultra-conservative method is slightly different, because what you actually do is you wait for a true break of the range. And instead of trying to enter either on a retest or if you're going to enter aggressively, so let's pop a blue line, instead of trying to enter here, you actually ignore the entry method and you're looking for the trend to initiate so that you can get on the next continuation pattern. And what you would do is you would just wait for the trade to consolidate, and then it is on the next breakout of the consolidation pattern. And here we can see that we have a nice horizontal consolidation pattern that you would actually look to enter. So in this case, we would look to enter around a retest of the level. For me, it would maybe be a little bit above the retest of the level. And then obviously you're looking for that trend to continue, which in this case it obviously doesn't. Now, the advantage of that is generally it does mean you will be trading within a trending market, and that is generally the easiest way to trade breakouts. Consolidation patterns are the easiest way to go.